In my last video, I profiled a very successful Japanese trader named BNF who made well over $150 million in his trading career, and I shared 5 of his trading ideas with you. Now, if you haven't watched it yet, you can check it out at the end of this video. So in this video, I will share 5 more trading ideas of his and give you some practical trading examples so you can replicate his trading success. So let's get started. The first trading idea that I want to share with you is BNF looks at the big picture. So let's just say, for example, when you sit in front of the computer, you're ready for the trading day. What's the step-by-step process that you do on a daily basis to identify stocks that you want to trade that day? Well, let me walk you through what BNF does. So the first thing he does is he reads the entire market and decides which sector that he should focus on. Now, I mentioned to you in part 1 of the series that he has about 50 stocks on his watch list. And then he has to decide which of those 50 stocks is he going to trade once the market opens. So here's what he looks at. So he looks at the stock price increase or decrease from the previous day's close of these 50 stocks. Then he ranks all these 50 stocks based on their price performance. He looks for any significant or abnormal trading volume in the stocks that he's monitoring. Also, he looks at the price performance of the leading stocks. And these stocks are generally the market leaders in their respective sector. And also, finally, he looks at the performance of the US stock market, the Nikkei 225 index futures, and generally looks to see what's going on in the global world. Once BNF does all this, then he has a good overall sense of the market and what sectors and stocks are performing well. And he can just focus on those stocks and patiently wait for the stocks to set up and then trade them. BNF's second trading idea is to look for seller exhaustion. Now, there are several signs that BNF looks for in identifying a stock that is bottoming and looks to go back up. And one sign is trading volume. Now, for those who aren't familiar with trading volume is the total number of shares that are traded during a given period of time. And traders typically utilize trading volume for confirmation of a potential continuation of a trend or a possible trend reversal. So BNF sees signs of a potential bottom for stock when he sees huge trading volume near the end of a stock's price decline. So once trading volume subsides a bit and the stock price starts to rise again, then it's a good entry point to buy. And as the stock price rises, he wants to see increased trading volume to confirm that it is indeed a bottom. Let me show you an example. Now, here's a chart of SoftBank, and you can see here that the stock price here has been starting to drop very, very rapidly. And what I want you to note here is this is the trading volume. So you can see as it's dropping, trading volume is actually increasing. And in fact, right at the bottom in terms of the reversal here, you can see this red candlestick and then a green candlestick as it keeps going higher, is the volume is actually at its peak. So this is a good example is that as the price is falling, you want to see increased volume. You want to see actually peak trading volume right at the bottom. And you can see here that this was actually in fact peak trading volume. And you can see that the price actually jumped up. And then here the trading volume is a little bit slower, but then you can see here trading volume started picking up, and then therefore you can kind of start to see that the price slowly started going higher. So here is a perfect example of trading volume giving BNF an idea when the stock is bottoming and ready to go up again. The third trading idea that I want to share with you is you need to know where the big sellers are. Now, it's obviously tough for a stock price to go up if there are a lot of sellers in the stocks that you're trading. So the key is really to identify where the sellers are and at what price, and then wait until all the sellers have sold, then you can confidently buy into the stock. So now you may be asking, well, where are the sellers usually at? Well, they are at strong resistance price levels. They are at previous tops or previous highs in the stock price. I made a video about how to identify price resistance levels that you can watch at the end of this video. Once you identify where the big sellers are at, then what you want to do is put a buy stop order above the resistance price levels, so that even though you're buying at a higher price, you know that there are few sellers left, so the price has less resistance to go up, and you know that there are strong buyers out there who have just bought at all the shares from the big sellers. So once you bought in, you want to be able to identify where are the next big sellers at and at what price. So you put a sell order below the price where the big sellers are at, and then again, these sellers could be at the next big resistance price levels. Now let me give you an example. So here's a 5-minute chart of Toyota Motor, and I drew this resistance line all across here around 99.62. So you can see that around this area there is a lot of sellers. So you can see here the stock went up, a lot of the sellers came in here and it pushed the price down. So the buyers tried pushing up again, getting close to that level, sellers sold it off, right? Push it down, buyers tried push it back up again, briefly went above a little bit above the line, and then the sellers here pushed it back down. So you can see that the sellers are right now outweighing the buyers. So the buyers again tried again, and you see it failed, and then down here the buyers tried to find push here, couldn't work. Sellers were still in control. Sellers, still a lot of sellers selling around this 99.62 area, okay, and then push back down, and finally the buyers were strong enough, and probably at this point in time the sellers were exhausted or all the sellers were gone, and finally the buyers were able to push this price right above here. So what you want to do in terms of looking at these resistance lines and seeing where all the sellers are is you want to buy, put an order, a buy stop order above where all the sell orders are. And what I would do is probably put a buy stop order around 99.70 or 99.80, just above where all the sellers are, and then once all the sellers are gone, then you can see that the price shot up. The fourth trading idea that I want to share with you is BNF likes to buy stocks that gap up. Now you may have noticed that sometimes before the market opens, a stock price has already jumped in value compared to their previous close. Now this could be due to many factors, either positive company news or earnings in the stock market, or just basically positive sentiment in the overall markets. Now this term is called gap up, meaning that the stock price opens up higher than the previous day's price. So what BNF says is that stocks that gap up at the market open should be bought and held. Now, since there are usually stocks that increase by 2 or 3% per day, you should monitor these stocks to see if their prices can go even higher. Now, if they don't go any higher, then BNF says that you should cut your loss within 1% of the stock price. So let me give you an example so you can see this concept a lot clearer. So here's a 5-minute chart of Nintendo. So what we want to do is we want to look for a gap up, and you can see here this was the previous close in the stock, and you can see right at the open it gapped up. And what we want to look for is we want to look for resistance levels. So there is a resistance level right here, but we're not sure whether this is a strong resistance level yet because it only hit there once. So you can see here the stock price went up and actually hit that price level, which is around 65,900, hit it. To confirm that is indeed a resistance level, it actually went down a little bit and then went right through. So what you want to do is you want to put an order and enter in the order right here, right above 69,900, and you can see the price rise right after that. I talked about this exact same strategy called gap and go in my previous videos, which you can check out at the end of this video. It was a chart of the stock AMC, which gapped up and kept going higher. Now you have to be very, very careful and selective on what stocks to buy on these gap ups because not all of them will work. So here are a few things that you need to keep in mind. So first of all, if the market is down a lot on that particular day, then these gap up strategies might not work. Also, secondly, is if the price gaps up and then trades in a very, very volatile manner, meaning that it's going sharply up, sharply down, then also it might not work. And lastly is that it's more ideal if the stock price gaps up due to some good news or earnings, because you need to see that there is a huge demand for the stock price and a strong number of buyers who are buying up the stock. BNF's fifth trading idea is to share with you what type of stocks that he likes to day trade. Now, as I mentioned in the previous video, BNF doesn't day trade much, but what he does suggest for traders who do day trade is to avoid the hot stocks of each day. So for him, he suggests the trick to day trading is to target stocks that are liquid, meaning that they generally have high trading volume on a daily basis and they constantly move up and down. So you're looking for more volatility in the stock. So stocks with too much price movements, but very, very low liquidity, meaning very, very low volume, such as those in emerging markets, are actually not suitable for day trading. Now, for me, what I would suggest for day traders is that you watch between 5 to 10, have your go-to stocks to day trade each day, get familiar with their daily price movements, find out what catalysts trigger the price to move, and typically what type of chart setup is best for each stock. Now, this way, you don't have to chase the hot stocks every day, but just have to wait for the perfect setup for the stocks that you are monitoring on a daily basis.